Right. So thank you all for joining me on this call. This one is going to be on, a rundown on some technical analysis and some things regarding when it comes to fundamental analysis, what you can kind of take on board with how the charts start to behave, which I think is quite important for you guys to kind of clock and understand, okay? Because as much as the technical analysis is there and the charts are there, when it comes to fundamentals, there's a few things that you guys might not necessarily be understanding that as much as you can trade 5 days a week, as much as there's a new trading day in terms of with it being Tuesday, you got 3 more days after this day of opportunities. When we have news events scheduled, right, there is a direct effect on basically the markets basically anticipating this data. So I want to kind of go through that with you guys and then actually look at some of the asset classes, whether it be the dollar and some of the currencies, so you guys can kind of see, right, okay, so there is a slowdown due to the fact of these fundamental releases. So what I'm gonna do, just gonna share my screen. I will go through one of the trades that I sent out today, but it didn't really do anything. So I'm kind of gonna come back to it tomorrow, if I'm being honest. Let me stop. Can you guys see my screen?
Yeah.
Yep.
Okay, let me just make this bigger. Okay, you can still see it or no? Wait, oh, Zoom
We
share.
can see Discord at the moment.
Okay, sorry, 1 second. How you doing, Leb? You good, bro?
Yeah, all good. All good, thank you.
Yeah. Sorry, let me just do this. You see my screen? No, you can't. Hold on. You see it now?
Yeah.
Perfect. So what I kind of want to, again, if I go into my effects book, I just want to kind of show you guys the economic calendar. And one thing you guys want to be taking on board and going into a new trading week, you should be checking this on a Sunday, especially a Sunday evening, just so that you're aware of basically what is coming out for the week ahead. It's imperative that you check it. As much as doing the charts is cool, you need to know what news events are scheduled, and obviously the only real focal point is going to be higher impact news. So we're only really focused on higher impact news. So if we just apply that, if you do this on a Sunday, did it even apply? Hold on. Oh, I still see low. Wait 1 second. Let me just refresh this quick. Here we are. So you're only really focused on high impact news events, okay? Reason being is that's what's going to cause the most volatility in the markets and things like that. So when we understand this, yeah, if we are looking on a Sunday evening and we know what is going on. Sorry. You know this thing. Sorry, hold on, guys. Let me just do this again. Sorry, that should work. All right, here we go. Apologies. So yeah, on a Sunday evening, if we're aware of basically news events around currencies that we're likely to engage in, we need to kind of know that, that particular piece of data is going to be important to that specific currency, okay? Whether it be positive or negative, that's another thing. So mainly red folders is what you're going to be focused on, right? So whether it be GDP, whether it be job openings, so unemployment data, you're obviously going to have the interest rate tomorrow. So where are we? We get to the bottom of this. As you can see here, 7 p.m. tomorrow is the federal interest rate. Okay, so that is something I've definitely got my eyes on, due to the fact that with the DXY being the reserve currency of the world, that is going to affect the majority of these currencies across the board. So we need to be aware of when the actual decision rate is happening, and also we can tie that into the charts actually slowing down. So like I said, with this being one of the looming global impact pieces of data coming out, we need to be aware of those things. So we also have some other things throughout earlier in the day, which is going to be, there was another one that stuck out. If I just go back up, the inflation rate. Okay, so with the inflation rate, For the Aussie, I'm not sure if any of you guys trade Aussie pairs. You might trade GBP AUD, or you might trade AUD USD or something along those lines, right? With such high impact data coming out, which is going to be very, very interesting to investors and hedge funders and people with a lot more funds than we are currently trading with, they are not going to actually engage the markets. Okay, so they're going to be kind of on the sidelines regarding when to engage and when not to engage. So we have to do the same. Now, if we understand that, okay, we can actually take it into consideration of waiting for these data events to happen. Okay, so what that could mean is you might get a pair that doesn't really trend. It might give you a bit of a consolidation and stuff like that. Now, that is directly tied to the news events that are happening, right? That are scheduled. So on the Thursday as well, you've got inflation rate for the euro. So again, very, very important data. You also have the unemployment data for the euro as well. So a lot of impact is going to be happening across the next couple of days. Thursday is also the start of a new month as well. So we're going to be getting the closure of a monthly candle tomorrow. So that's something as well that I'm going to be pointing out on the charts for you guys is when you're tying things together, you kind of need to understand that what are your expectations when you're coming towards the end of a month when a new month is starting, okay? You're also going to have the Bank of England interest rate on February the 1st. So again, there's a lot of impact data that we can kind of contribute to why the markets may be moving slower, right? So
Okay.
someone say something. Okay, cool. I'll continue. You also got jobless claims as well on the Thursday. So a lot of high impact data to finish off on Friday. You've got non-farm payroll, which is basically the employment data for the whole of the US. So think about all of those things that I've just said regarding the US. We had some euro, we've had some GB, we got GBP on Thursday as well. We got some Aussie inflation data. So all of these things are going to affect the pairs. So if I start by looking at the dollar, which you should be doing as well, for those that are trading your major pairs, anything tied to the dollar, you want to have a hand in how the dollar is actually looking, right? So if we just look at the dollar on the daily, who can kind of, point out what they can notice about the daily picture?
The daily,
In regards to the current price, what can you really point out regarding price currently?
It's been consolidating for the last few days.
It's been consolidating. Anything about the volume?
There isn't any.
There's no volume, right? So why would there be no volume? Okay, and let's think about what I just pointed out, which is happening tomorrow. Yeah, we've got that all
They just start waiting.
right. Exactly, Jack. We've got all important interest rate data coming out. Yeah. The consensus is 5.5, meaning they believe they're going to keep the current interest rate at 5.5. But until the decision is coming out and released, we're not getting any real clear, concise volume in the dollar at all. Now, that's going to affect GBP USD. It's going to affect Euro USD. It's going to affect AUD USD. It's going to affect USD CAD, USD JPY. All of these currencies that include the dollar are going to be affected by this because when you have no real bias and just by looking at the daily picture, hopefully you guys can understand, it's going to be hard to depict a bias. This is why for the Euro trade earlier, I pulled out. We was in a little bit of profit, but then I looked at the dollar and I was like, you know what? I don't actually have a clear reading on what I believe the dollar is going to do. I don't know. I didn't know if it was going to go up or down today. And then when I kind of thought about what was happening tomorrow, I said, if we're not really going to get any real movement today, I would rather look for the opportunity to, tomorrow, potentially during the London and New York sessions. But going into 7 p.m., that's going to be 2 p.m. New York time. Okay, that is when the interest rate's going to release. The dollar may not do anything tomorrow. And the reason I say that is because if you couple the interest rate decision, it's also the last day of the trading month. Now, what you'll find, right, is if we go into the monthly time frame, and you guys should do this as well once a month when we're coming to the end of a calendar month, you want to kind of see how that candle closed. Okay, so if we look at the dollar on the monthly, if you think about the bulk majority in terms of the volume of this candle, we've kind of already had a lot happen already, right? Meaning, what are we likely to see happen? Like, are we likely to go and get like a 200, 300 point move on a dollar with 1 day left of the month? Probably not. Probably not, right? So you guys have to kind of have a limited expectation in regards to what is happening come the end of the month, because the likelihood that you get something significant, probably not, right? So the news, however, can affect it in a way which is significant, meaning it could push it up for the remainder of this month. But if you think about 7 p.m., you've only got 2 hours left of the New York session. Then you're going to go potentially into the Asian session with a lot smaller volume. So in terms of what you can expect, the majority of this monthly candle has been printed, guys. So I want you guys to understand, right? You only get one candle a month, which is printed. When we're at the end of the month, the majority of that volume is been and gone. So it's always good for you to reference the higher time frame at the end of the month, just so that you understand. Another thing to kind of reference going into February is the fact that we have an imbalance here, right? So could we potentially see price play into that imbalance going into the new month? That would make sense. So you can already have a potential expectation for the dollar going into that next month because you have such a higher time frame point of interest area. All right.
Can I ask a question regarding that?
Yeah. Who is that, bro?
Oh, sorry, I forgot to change my username again. It's me, Naeem.
Sorry, bro. I was calling whoever was iPhone. Apologies. I was calling you Naeem earlier. I couldn't remember, bro. Yeah. So go on.
Oh,
Yeah.
you said there's like a bit of an imbalance above, but there's also an imbalance below. How do you know which one it would fill first?
We don't know. We don't know, bro. Where is your imbalance below as well on
Yeah,
on this time frame?
yeah, just a little bit below that previous week.
Yeah,
Like,
sure,
yeah.
sure thing. Yeah. So you don't know, bro. There's no,
Okay.
I don't have a crystal ball to kind of suggest it's going to go up. We don't know. So the only thing you can follow from a confirmation perspective is the market structure. So if you think about the weekly picture, we've clearly been like pushing to the upside here. We could potentially push down from here with this weekly candle being here, but the likelihood of the likelihood of them wanting to go up higher, okay, is there more reasons to go up higher? That's kind of how you need to build the case for it going higher. Now, is there any reasons you could see as to why it would want to go higher?
We're just looking at those candles, probably not, just because it's getting smaller and smaller.
What do you mean? What's
Like,
getting smaller and smaller?
you know, the candles, the body of the candles, like,
Where it is currently?
yeah, like maybe.
Yeah, but that's not what I'm asking you. What I'm asking you is there reasons that price could want to go higher? And if so, what are those reasons?
News.
Yeah, but news could also drive it down. So news is not the answer I'm looking for. Because
Liquidity.
with news, news could basically present unpredictability, whether it could go either way. So that's not the answer I'm looking for.
Oh, okay.
What do we see on the chart? Is there anything that I've just highlighted on the chart?
Liquidity as well.
Right.
Could
There's
it?
liquidity
Yeah.
above. So you have equal highs above, right? Clean equal highs above, right? Where this imbalance area is, right? So is there reasons to then go for that? Yes, of course. There's more reasons to go for that on the higher time frame than there is to come lower at this current moment. The only reason that it could potentially come lower at this current moment would be due to this eye candle right here, yeah?
Yeah.
But if we're not getting the market show us the willingness to want to go lower, we then have to say, okay, why is it stalling? What could it be holding out for? In my opinion, it could be holding out for these areas above. You have clean weekly highs, may I add you. It's not daily, it's weekly highs. So it's a lot of liquidity there. And you have an imbalance. And you have an eye candle. So there's more confirmations on this time frame to suggest it would want to go higher before coming down. Now that's my opinion, right? That's the reasons I'm giving for my opinion. I'm not saying the news tomorrow can't drive this to the floor tomorrow. It could. Yeah, because there is an imbalance here as well on the weekly. It could want to do that. But what I want you to kind of understand is the monthly candles coming in tomorrow. Yeah. Why potentially not would we not think about it wanting to close higher to close out that month, right? And then with it closing out that month, yeah, it's going to be filling in this monthly imbalance a bit. Now, I'm not saying it's going to fill the whole thing. I'm not saying that. I'm just saying there's more reasons for it to want to do that than to suddenly just catapult to the floor in the final day of the month. That's not really the expectation there, because if you look at how this monthly candle is closed or is going to close, what is it going to print? A bullish candle. Yeah, so you guys have to realize that we're having a bullish month in January. That's the likely outcome. It's likely to have had a bullish month in January, right? And engulfing as well. Like this candle, if it finishes how it finishes tomorrow, would have engulfed the previous month. So that's a good month for the dollar, right? So then when we go back to the daily picture, okay, if we just look at structure for what it is, do we have a clear, concise, bearish structure? Not necessarily. In terms of what we've been getting here, not necessarily at all. So you have to then say to yourself, okay, what's the next move? Do I have enough data to kind of conclude what I believe is happening next? The answer is no. You don't. So if the answer is no, you need more data in order to conclude what you think is happening next. You could go on the 4 hour, you can have a look at the 4 hour. All the 4 hours are going to show you is price doing what? Going sideways. So if you look at this picture here, yeah, there's no real direction. Yes, we've pushed up, but once we pushed up, we've entered a range, okay? We had the top of the range here, the bottom of the range here. Yeah, we just about took this top of the range out again here. So when it's doing that, yeah, if you look ever so slightly, it's gone above this high. I can put it down a tiny bit. There we go. Ever so slightly, it's cleared these highs. Now, the reason it's doing that is because it's not giving anyone a clear, concise way to engage the market. Yeah, it's basically saying, if you're gonna put your stop loss here, I'm gonna try and run for it. If you're gonna put your stop loss down here, I'm gonna try and run for it. So it's not giving anyone any leeway in the sense of saying, okay, you're right to go either direction. So when the market is like that, we have to be aware of that and just say, you know what, I don't really have a real consistent bias at the moment, and be okay with that, because you're not doing anything wrong if you can't read the market whilst it's consolidating. Yeah, it's consolidating because it's a time where it's building liquidity in the market. Yeah, because people will be buying and selling throughout this period of consolidation. So when it's building that liquidity, it's within your best interest to not add to this liquidity, because you're going to put it in areas where the liquidity is being built, whether it be above or below. It's not going to be in your best interest. And when it's consolidating with a news event to come out, that is when the market is going to be manipulated the most in order to do what? To target those areas of liquidity. So we're not here to do some type of fancy gamble and say, yeah, like this is what it's going to be. I think it's bullish. I think it's bearish. We're not sure. Even if you're bullish, right? There's nothing suggesting it can't come down first, right? If you want to be a buyer, you actually technically want a market to come lower. Yeah, because you want to buy it at a lower price. If you want to sell a market, you technically want the market to come higher. So if you think about what I'm saying there, if we go back to the weekly time frame, right? If I'm trying to be a seller, I would want the market to push higher before I become a seller. Does that make sense to you lot?
Yeah, because you want the premium price.
You want a premium price, but not only that is you want to see sellers previously be getting taken out. You want sellers to exit the market, because you got to remember, if sellers who trade, you know, your support and resistance, people that look at the market like that, if they're seeing these areas get taken out, they're saying resistance has been broken. I now think it's a buy. You got to think about the psychological aspect of people that trade that way, what it does to them. Yeah, it's going to entice them to now believe something is happening when the market might be moving higher so that they can start selling again. Hence why when this market started pushing down, it pushed up the week before it started coming down heavy. Yeah, it pushed up the week before it started coming down heavy. So whenever you want to be a seller, you want the market to go up. You don't want to sell something when it's already dropped to a discounted price. You want to sell at a premium. Yeah. If you want to be a buyer, you don't want to buy at a premium. You want to buy at a discounted price. So you want the market to do what? You want the market to drop. So that's the misconception I think a lot of people have when it comes to when's a good time to be a buyer. What, you know, where's the market likely to go to that I can potentially buy or sell. You got to just have areas that you're interested in and play from those areas. That is literally the best thing you can do. You have an area you want to play from, or you don't have nothing because the market isn't giving you nothing. So referring back to the daily time frame again, the last 3 days, if we just count the last 3 days, this market hasn't given us nothing. Let's just be real. So if the market hasn't given us nothing, we have to limit our expectations of what we can actually not produce, but like what we can gain from it. Yeah. And you can carry that into Euro USD. So Euro USD, for those that was looking at the trade that I put for H, looking at the trade that I put out today. So I'm gonna walk you through my reasons for trying to buy this trade. Yeah. So here we have this higher time frame area. Yeah. So for those that have gone through the lesson on or the education, hopefully you guys have done that. You would have understood, okay, why this is an area I'm interested in. If we look at the overall picture as well, where are we within this swing? Where are we? Oh, let me get the whole thing in. Where are we within this swing? Where are we?
We're discount price.
We're at a discounted price. So would this be a potential area that makes sense to buy? Yes.
Yeah, of course.
Yes. Right. So if that is the case, if the market structure is giving me, what is it giving me? Bullish structure is what I'm asking for. Yeah. It's giving me bullish structure. What are we getting? We're getting higher highs, higher lows. Yeah.
Yeah.
So if we're getting higher highs, higher lows, right, we're potentially on the right side of an area that makes sense to be a buyer or seller. Yeah. Now tomorrow, if I can look at this trade and potentially get a trade in the morning, happy days, right? Because I do think this is high probability. Now the reason I think that is the structure is on my side, so I'm not going against the trend. I'm not counter trending. I'm not buying in an area that is premium, right? I'm buying in a discounted price. I'm buying in an area which is my area of interest, right? So already I'm having 3 higher time frame concepts on my side. Yeah. Now I'm going to show you what I saw this morning to confirm my area of interest. Okay. You guys is on the call. Hopefully you guys is on the call. I don't want to speak to everyone. You guys is on the call when I done swing points though, yeah?
I watched it last week because I weren't on the call. I was traveling.
Perfect, right.
Yeah, it made a lot of
Yeah,
sense.
I was too.
Perfect. So just follow the structure, guys. Yeah. I want you guys to paint a narrative and logically paint a narrative of what's going on. Yeah. So we have a swing point here. Got a swing point here. We have a swing point here. What happens?
Should break.
The structure changes.
Yeah.
So if the structure changes in a higher time frame area, that is what you want to see, right? That is what you want to see. Now, does that mean buy straight away? No. You still have to have your area you want to play from, right? What time did this happen?
$8.15.
8:15.
8:15. So there's 45 minutes left of New York session. Yeah. London session's closed. So the time is breaking the structure. We're not necessarily interested in entering this trade. Yeah. Because you're going to go into the Asian session, which is like viable to give you smaller volume. Okay. You're not really going to get mad volume in the Asian session. Yeah. For those that have kind of gone through the education and stuff like that, hopefully you guys have kind of seen that. If you haven't, I know Lev, we got a lesson on it soon. Don't worry, bro. I'll teach you about that.
Sure.
There's a time you want to be finding these things happen. So the fact that it breaks structure, you should be going into the charts the next day with that in the back of your mind. I've had structure break in a 4-hour area. Okay. Now with it breaking structure, it's not only doing it with intention, there's volume behind it. There's a lot of volume once it's breaking the structure. So where's that volume coming from? Because me and you can't move the market like this. So the intent to do that was there. So if an institution's doing it, they're gonna have a footprint, is what I'm getting at. Yeah. Now, what time does it come back to this imbalanced area?
London.
Pre-London.
Yeah.
So a time that we're interested, basically. Yeah. A time that we are interested. So once we start to see this in the morning, yeah, if we go on I want you guys to remember this area because it's going to look different. I just want to go on a smaller time frame because this is what I was looking at. Okay. So remember, this imbalanced area is on a 15-minute though, yeah? But what can you know? What are you noticing about the structure here? What's happening? Because it's the same thing I just showed you.
Changing structure.
The
Upward
change
trend.
upward trend. Call it a change in structure, bro. But I'm with you. Right? But the key things to identify here are the swing points. Yeah. The swing points. They're the things to identify here. So when this happens, right, you're basically seeing price get back in tune with what you think the future direction is going to be. Do you understand? So all you then have to do is plot on areas that make sense to you. So if you didn't trust this 15-minute area or whatever, you didn't just press buy here or whatever, you can now follow the fact that this structure has done what? Shifted. Yeah?
Yeah.
So to add more confirmation, whenever a structure breaks, and write this down, whenever a structure breaks, you can pull your fib out. You should be pulling your fib out because your Fibonacci works best when the structure first breaks. Yeah? It works best when the structure first breaks. Now, some of you lot might not be there yet. Don't worry about it, yeah? But Fibonacci works best when structure breaks. So, if I was to do this, right? Price is playing in around discount prices. So we're looking at 62, 70, 79, 88 last gasp measure, but really it's the 3 green zones is what we're looking at. And we're looking for confirmations that we could play from. Okay. The confirmations we can use to play from is this candle right here. Yeah. We can use this candle to play from. What's this candle, guys?
High candle.
So do you understand how I'm piecing this together?
Yeah.
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 Now, a lot of people, right? They jump the gun and think something is doing something before it isn't. Yeah. The market's going to show you what it's trying to do if you're really paying attention. Yeah. It's showing you what it's doing. So we then got to move. The market did go into profit. Okay. I was holding out this trade. We was in a bit of profit. I wouldn't say it was crazy profit. It wasn't. But then the market, to me, once I saw this happen, I said, you know what? I don't like the fact it's doing that. Right? Even though the market, this is still valid, by the way. This is still valid. But the fact that we had this here, I then said, you know what? This could actually shoot back down, back to price or break even. Now, it hasn't done that. I'm not saying it's going to or it's not going to, but I didn't like the fact that it created this, right? And if we go to today's releases, okay, 3 p.m. 3 p.m. job openings for the US, which was positive. So I said, oh, so that's why the market's going down, because the dollar got stronger. So when that happened, I said to myself, you know what? I'm going to come back tomorrow and see if I can get entry because this is still valid for a buy. But why I'm trying to make you guys piece this together is you have a 5-minute structure, what I just showed you with this. Let me just get rid of this fib. You have a 5-minute structure you can follow, or you have the 15-minute structure you can follow. Once the structure shifts, you can pull your fib out, right? 62% is where this imbalance is. It's where this tiny eye candle is. Not a coincidence, guys. It's not a coincidence it starts getting bought up from those areas. Now, we're likely to potentially go up because, again, until this 4-hour area is invalidated, the trade is still valid. Now, I will be trying to buy this tomorrow if the opportunity presents itself going into London or New York. If the market just starts going sideways and I can't really read it, then I'm just going to wait for the interest rate to clear and then look for a sell. But I do believe this is a buy. Okay? But do you guys understand how I've just pieced that together? Like, has it given you guys a bit of clarity or not really?
Yeah.
So think about the how many confirmations I've given you for this trade. Yeah. It's not just the eye candle and I'm pressing buy. It's not as simple as that. Yeah. As much as we want it to be, we need a bit more what's the word I'm looking for? Convincing. Convince me that you're doing something. Because you gotta have foresight in terms of like trading, yeah, and being profitable. It's all probability based, meaning you have to have foresight and probability and the probability on your side via building the case for the trade to suggest, raw, this could go to up here, this could go to up, because you're going to be getting in at the bottom if you're a buyer and at the top if you're a seller. You're not just going to be seeing traders that see price flash down and start pressing buy or sell. You ain't making no money long term. That crap doesn't work. I'm gonna just be real with you. So all you guys that may or may not be doing that, I'm gonna tell you now, that crap doesn't check out long term. I used to do that. It does not work. The market is not gonna allow you to just tag along now that it's flooding. And even if you did, there's no skill in that. You're not really a trader. You're gambling on it continuing. That's not no skill. Even if you get paid off that, you ain't consistently gonna get paid that way. So I hope you guys don't do that. Right? You have to have foresight by building the case, by having logical explanation for why you believe something is happening. And it's based off market structure. It's based off an area you're interested in. It's based off liquidity. You can use Fibonacci and all of these things that I've got on my screen. Do you need them? No. I don't need Fibonacci because this is an area that I can, if you can actually look at price for what it is, you can kind of see that this is a valid retracement. But obviously, if you want to use the fib, go for it. I'm not saying don't use it, but you don't need the fib for every trade. Notice as well, I had a fib on a 15-minute and I had a fib on a 5-minute. Every time frame has its own fib swing. Every time frame has its own structure. You have to kind of understand that. It might be over your head at the moment. So how can I use the fib on here, but then you're using it on it? Every structure has its own swing points. This is the valid swing point. This is the valid higher low. This is the valid higher high. Does that mean the 15-minute has a valid higher low and a higher high? Yes, it does. The 1-minute has its own structure. Every time frame you can use fibs on, but you have to understand where the valid points are. It's from a swing perspective. Yeah. Does that make sense?
Makes sense.
Yeah. So when we understand this, I've built the case to the best of my ability. If I lose, I will live with that because I built the case to the best of my ability. There's nothing more I can use from a confirmation perspective. There's nothing more you really need. It's either going to play in your hands or it's not. So far, we haven't seen much volume to the upside, but it is showing me signs of wanting to potentially go up. It's showing me that. But with the news event looming tomorrow, maybe that's why it's stalling. Most probably that's why it's stalling. Because anything tied to the dollar, they're going to be anticipating whether it's good or bad news for the dollar tomorrow. Whether they raise the interest rate, whether they lower it, whether they keep it, who knows? The outlook on the dollar is a very important factor. Any questions with that, guys? No questions.
No.
Cool. So that's kind of what I want to speak to you guys about. Yeah, in terms of like what you guys got to take on board. Fundamental analysis. I hope. Do you guys check it every week?
Yeah, I check the economic calendar every day. Really.
Every Sunday?
Not every Sunday, every day.
Every day is fine, perfect. But Sunday you should have in the back of your mind. Okay, what's actually happening this week? Yeah,
I'll put that down today.
what's happening? What can I prepare for? Because you're able to actually base potential opportunities off of what's being released when the market's going to potentially not do much or whatever it may be. You're going to wait for that release, and then hopefully after the dust settles, you could potentially get a sell. But beforehand, when it's such a heavy news release, you're not really likely to get that sell.
So do you always look for your entries on the 5 minute or the 15?
Yeah, 15. So it's not always 5 or 15. Sometimes it's a 1 minute. Sometimes it's a 2 minute. Sometimes it's a 3 minute. It depends on what price action looks good to me. So with this being a 4-hour area, if I go in a 5 minute time frame, yeah, bro, and I go back to that area on the smaller time frame here. Why is it not dragging? Sorry. It's working or... Okay, cool. Sorry. I don't know why it's doing this. Playing up. Hold on. Does this work? Can't see my cursor. All right, sorry. Here we go. Bro. My days. All right, there we go. What is wrong with this? Let me refresh this. Hold on. When it decides to load. Sorry, guys. Okay. So 5 minutes. Oh, I don't know what that is. All right, cool. So if we look at the 5 minute here, guys, yeah, where we had the structure shift, look at that area that I highlighted. Do we see the eye candle here? No. So the picture doesn't look as good to me. So you have to always be going through time frame to understand what picture looks good to you. Right? We go on the 3 minute. Better. Yeah, the picture looks better. You can see the confirmation. See why you're trying to enter. A lot easier in terms of an area you can identify. So it's not always 5 minute rough, it's not always 15 minute. It's what time frame looks good. Yeah, what time frame looks good. Makes sense, bro.
Yeah, definitely, definitely.
Any other questions, guys?
Just to clarify on my previous question, if you don't mind. So if you see like imbalance on both sides, so like below the market price and above the market price, you would just look for more confirmation to see where the price wants to go. If there's more liquidity above, for example, you would foresee that the market would go up, fill the imbalance, and then come down, kind of thing.
I'm not saying it's going to do that because there's no given that there's no 100% with that. I can't say yes, but the likelihood is that you're the main thing is building a case for reasons, right? So meaning you need to build a case for, does it make sense to do that? Yes, it does. So if the market is going to do that, I understand that that checks out in terms of your confirmations. The next thing is seeing the market structure, seeing the price show you that's what it's trying to do. It would, if the market structure is gonna do that, bro, excuse me, it's gonna tip its hat to you. Hence where you get the structure shifts, the breaks, yeah? The market is gonna tip its hat. So you have to wait for that. Just because you see market play into a liquidity area or play into, does that mean you're gonna press buy or sell straight away? No, you don't have enough evidence. How do you know it's not gonna blow through the whole area? You don't. So there's no, all you can do is build a case for a trade. That's all you can do, bro. Every single time you're looking at a setup, do I actually have a case for this? So
Yeah.
that is with you finding your confirmations on whatever time frames that check out. Now, whether you have an imbalance higher or lower, the structure is always gonna be the main confirmation. The market structure is what you have to follow, bro. Now, if there's a
Yeah.
news event where it just spikes into an area, you can't foresee that. None of us can. We don't know where the market is going to drive to with news. It's news for a reason. It's going to push the market for that reason alone. We can't foresee that. Yeah, so don't beat yourself up like, oh, I could have saw that. Like sometimes, bro, when the market consolidating and then it just shoots through with the news, let it do that. Don't try and engage with that, because if you couldn't engage with it before it done that, then you didn't have a trade, bro.
Yeah, I think it was yesterday or the day before yesterday, I was looking at gold, and
Yeah.
it looked on the one day it looked bearish to me, and but then I saw Bouncer, he put like a swing trade on the buy, and
Right.
then Litcap, he did a sell as well on gold.
Yeah.
So it was interesting to see that Bouncer thought it was going up because there was a imbalance above, but I saw it as a bearish. Do you mind going to the gold 1 day chart? Like, I just want to see what you think and what your thoughts are and what you would
Yeah.
do as well.
I don't really trade gold, but yeah, we could do that. 1 second. Gold. Gold. Right.
Yeah, on the 1 day. So
Hold on. Let's follow it. Yeah. So gold, right. So just off rips, taking out liquidity, and there's an imbalance there.
yeah. So when I looked at it, it was like, I think it was yesterday or the day before yesterday, I can't even remember. But
It's filled that. It's filled the imbalance.
yeah. And then
Yeah.
there's also imbalance below, like like you can see that big one.
Yeah, it's filled as well, I believe. It's filled. Okay, there's a little bit left, but it's filled majority of it. So yeah, go on.
No, I'm talking about, yeah, you know that big green candle, the bull, like, no, yeah, there. Isn't that at the bottom half? Isn't that all in like not filled?
It's gone, bro. It's filled. Look.
No, what about lower? I'm talking about that big green candle. Yeah, the one you highlighted.
The wick
What
on the
about
left
what about
of it's
beneath it?
already took that imbalance.
This one.
No, on the left.
This one.
Yeah,
left of
that
that.
is.
Yeah, but that's
No, yeah,
gone, bro.
that entire candle. What about the bottom half? Like, doesn't it? Does it
Yeah,
just
so
need to?
yeah, but that's what I'm saying, bro. It's played into it here. Look,
Okay, so it doesn't need to fill the entire candle.
no. That all it means is when it fills it, all it means is this is now the remainder of it. That's what it means. Do you
Okay,
understand?
so do we anticipate that it is going to get filled, or it doesn't really? Because I remember in the education
It
video.
doesn't have to, because at the end of the day, right? Not every so look, let's look at this, right? Look at it like this. There's an imbalance here. Did any of this get filled, bro? No. Did any of this get filled? No. There's always going to be imbalances, bro. It's not going to fill every single one. Yeah.
But doesn't it come back later on to fill?
Yeah, but that's not the reason. So think about it, right? We're in a what? What is this structure overall? It's bullish, isn't it? Right? So if it's bullish
Yeah.
overall, do we have to fill every single imbalance to go bullish? No. Why didn't this get filled then? Do you get what I mean? So
Yeah.
if you're waiting for every imbalance to get filled, you're gonna be waiting a long time, bro. Right? So look, there's an imbalance here. Did it get filled before it went down lower? No, it didn't.
But eventually that one did though, right?
Yeah, eventually it did.
Yeah. Okay.
Eventually it
I
did.
get
But
it.
what I'm trying to say is there's
But
no
we don't wait.
timeline to that, right?
Yeah.
This is the 15th of May. So what, you're gonna wait till the 30th of October for a sell? You're not gonna wait that long.
Yeah.
You understand? You're just not gonna wait that long. You're gonna follow the trend. The trend is more important than imbalance. Market structure is more important than imbalance. So this being filled here, are you gonna wait for this to fill the whole thing before you potentially get a buy? You're missing out on the trade. These
I
are
get
all
it.
areas of interest, right? They're all areas of interest, but you're not gonna be like, oh, I need the whole thing filled. So look, I could go far back, bro. There's an imbalance here. Did it fill any? It filled a tiny bit of it and kept moving, bro. Right? Another imbalance here. Did it fill any of this? No. Has it filled any of it since? No. So you're not just gonna wait for the imbalance to get filled. Do you understand? You'll be waiting all day, bro. Well, not
I
even all
get
day. You'll be waiting all year, should I say?
Is that the case for lower time frame as well? Like even the 5 minute, the 15 minute.
Nah, so with lower, I'll be real with you, lower time frame imbalances are less, not important, but they hold less weight. They hold less weight. In terms of an area you're interested in, right? You're not just gonna play an imbalance area on a smaller time frame by itself. You shouldn't do that. You can't play imbalance by itself. You need more confirmations than just an imbalance area.
Yeah,
Yeah.
like market structure,
Market
etc.
structure, liquidity, an eye candle, something. You can't just play the imbalance alone. Because if you think about price coming into here, right? You're not just playing the buy based off of it's just being in this area. You're going to observe the structure because before it starts to really move, it plays around this area for a few days. So that means, right, when you check that out, right, you're going to check it out to see, okay, how can I get an entry potentially, is what you're saying, right? So
Yeah.
you're not just going to press buy just because we're in the imbalance. I need to see the structure change. Right? Did you understand?
Yeah, I get it.
So you're not just pressing buy or sell. Like you need to be like, okay, what else do I have here? Because it's all good at being in an imbalance. What else can I use though? Yeah.
Yeah. If you go back to the 1 day on the please. You see there, like it failed to make higher highs. So would you say there's a potential reversal coming?
It failed to make higher highs. What do you mean? What now?
Like no, yeah. So so you see like if you look back, it's going higher, higher, higher with lower highs, but it failed to make higher highs in the last few days.
Yeah. So
Would you
everything
say
is,
it's potential, like something's happening, like potentially like potential reversal?
yeah, yes and no, because again, you gotta factor in what is your bias on the dollar, bro. You should always reference the dollar. because you're not just trading gold, you're trading gold against the dollar. The dollar is a reserve currency. So if the dollar does well, this is going to come lower. If the dollar doesn't do well, gold is going to go up. So that's what you have to base it on. And if you look at gold the last few days, there ain't really nothing to base it off of. It's not really showing you much. Yeah. So when it comes to the valid swing, yeah, if you think about the structure, it's always about structure. Yeah. So if you have a swing here and then we've made a swing here, right? You're not really bearish until this swing is broken. So it can come down. It could play into here and potentially you could be a buyer. You could play into here, potentially you could be. Do you understand what I'm saying? Like,
I get it.
you got to understand that the structure is overall still bullish. Does it mean that it could come down lower? Yes. Does that mean that it then turns the structure bearish? No. Not on this time frame. The structure is still bullish here. So you got to understand each structure is different. Each structure is going to have its own picture. You with me, yeah? So
You know, I think I don't know is his name Pavel.
yeah,
So he did like a sell on gold, but knowing that the market is potentially bullish, but doesn't that go against the like strategy what we're learning? Like you go according to the market bias, no?
no, because okay, not really, bro. You can be okay. So look, the market is overall bullish, yeah?
Yeah,
Do you get a bullish candle every day?
no.
So does that mean you can't be a seller then?
Okay, I get it, yeah.
So the market is not just going to be a buyer's market the whole time, is it? There's going to be days it doesn't be a buyer's market. It comes down. So why can't you sell? Of course you can. You're going to get normal price action is like this, bro. This is normal bullish price action. So just because you get a retracement that makes it bearish, of course not. It has to do that. You're not going to get this because we're bullish. It's not going to do
Yeah.
that.
I
Do you
just thought it was like against the like if it's a bullish market, I know it will come up and down, but like if it's bullish, ideally on the lower time frame, you should be looking for buys because the money's on the higher highs because it's a bullish market. That's what I thought. But I
No,
get
not
no.
necessarily, bro, because people are
Okay.
still going to be selling. Yeah, you still got a sell area. Yeah, you still got people selling here. Yeah, that like there's liquidity above, so that means people are selling, right?
Yeah.
The market is coming down. You get what I'm saying? So just because overall we're bullish doesn't mean, like, if you think about the trades Cavel's sending out, is he telling you it's going to 1800? Does he tell you it's going to 60? He's not telling you it's going crazy low. He's just saying this might come down today. Do you understand what I'm
Yeah.
saying?
Yeah. So I'm guessing like if you're trading on the lower time frames, maybe then the hour, 15 minute or 5 minute, maybe like looking at the 1 day and the 1 week isn't too like it doesn't hold too much weight. Maybe looking at the 4 hour and the 4 hour and the 2 hour would be a bit better. Would it weigh more like analyzing that kind of thing, kind of like market structure, like on the shorter term? Do you get what I'm trying to say?
No, not really, bro. Can you explain it in like a better way? I don't really get what you mean.
Like Like, so you're saying like even though gold is a bullish market right now, you can still do sales like how Cavell did.
Yeah.
But what I'm thinking is maybe it's better like analyzing like the market structure on the 4 hour and the 2 hour and the 1 hour might hold more weight than analyzing the market structure on the 1 day because you're closer to the lower time frame. Or is that not the
Nah,
case?
man, but but the structure's doing the same thing, just on different time frames. It's all doing the same thing. So the 4 hour structure is doing so like you get one daily candle a day. Within that daily candle is you've got smaller time frame structure, right? But if you go to a
Yeah.
4 hour, all it means is you're gonna get more candles over a period of days. Meaning, what do you get in the you're gonna get 6 4 hour candles a day. Do you understand what I mean?
Yeah.
So you're just breaking it up into a different picture. That doesn't mean it holds more weight or less weight or anything like that. The higher the time frame, your analysis should match your higher time frame anyway. you understand? Like
Yeah.
it should match. So the reason we potentially are wicking today is because we took out these highs, we played into this imbalance, and we touched this candle where the market began to sell down from. So that's potentially why it's moving like that. Do you understand?
Yeah.
So you should always base your analysis off higher time frame.
I get it. Yeah, no, thank you. I understand.
No worries, bro.
Very
No
much.
worries. No worries.
But how comes you don't trade gold that often?
I just don't like it, bro. I just don't like it. I don't prefer it. It's not really my gold has its own behavior.
I've noticed you like oil a lot.
I do like oil. Oil is less wicky than gold. Gold's just you can't. It's too wicky. Like when you're trying to have a reasonable stop loss, you need a little bit more. And I don't like the fact that you have to do that because it just wicks a lot.
Gold is too violent.
It's very violent. It's very aggressive. It's very
How
aggressive.
do you work out the pips on oil? Just stick it in the Stinu app. Is it on the Stinu app as well?
Yes, it's called WTI. Yeah. WTI.
Yeah, is that on MT5 I type in WTI because I couldn't find it last time.
No, depending on your broker
It's US oil, isn't it? On ECG.
yeah, on ECG it's US oil.
Oh, US oil.
Yeah.
Let me type it in. But it doesn't
So-
come up for me. It's a bit weird.
It should do, bro. It should do. But in terms of just everyone has their preference. A lot of you lot like gold. Props to you. Like you're in the market to try and you get it. Like it's very volatile. It pays you well. Not knocking it on that regard. I just don't like the behavior. Every chart has its own behavior. That's what you gotta understand. So if you can learn these concepts, you don't just have to trade. You're not just limited to gold or oil. You can trade whatever you want to trade. So it's studying the behavior. Everything moves slightly different. So that's what I would suggest with that.
On TradingView, do I just type in WTI to find
Or
US
US oil. It's on there as well. US oil.
Okay. But on MetaTrader 5, depending on the broker, you can't find not everything. Is that what you're saying?
It depends who your broker is. If they have it on the platform. ECG has it though. So
Okay.
you just gotta kind of look for it. It will be there though.
Okay, cool. Thanks for that.
So yeah, guys, I'm gonna wrap that there. So I hope you guys found a lot of value in that. Hopefully, I didn't bore you to death this time. Take away, don't just listen to me speak. Maybe go back through this recording again and go through your charts. Like that's what I want you guys to do. I don't want you to just listen to me, close your laptop. Yeah, it's been a long Tuesday evening. All right, cool. Go and test what I'm talking about. I want it to check out for you. I don't want you to just listen to me and be like, yeah, Jay said this. Go and see if you can find it. Yeah. Interest rate decision 7 p.m. tomorrow. Let's see what happens with that. Money day.
Thanks.
Thank you. Cheers.
All right, Bills, I see you.